We are staying with Wall Street news this morning. Stocks are up, great for Wall Street, but also great for you. We have dialed up the Watchdog on Wall Street, Chris Markowski, to tell us what it all means for the average Joe. Good morning, Chris.
Good morning.
Okay, so let's talk about the S&P up 907. I guess it ended at 907. What does that mean, really?
Well, I mean, it doesn't really mean much if you're a long-term investor. I mean, glad everybody's going to be looking at their statements this month, and for the first time in a long time, they're going to actually have a smile on their face because their values haven't been going down in their 401ks. But, over the long term, once again, this is a blip. I've said, many, many times when I've come on is the fact that, you're going to look back, if you're a long-term investor, at 2007, 2008, 2009 as some of your best years for investing because it was when you were able to buy stuff on sale, on the cheap, and now we're starting to see things run up a little bit quickly. We could be due for a pullback. Everybody should just, kind of take a rest, calm down, don't do anything drastic, stop trading those stocks and mutual funds in your 401k.
Okay, so the experts are saying that, for once the housing market is what sent those stocks soaring. Why is that?
Well, that was a part of it. It's just more good economic news. You're also taking a look at earnings numbers coming down. There's many, many different variables and factors in regards to why the markets were up. When companies beat their earnings estimations, which have been brought down precipitously over the past several months, of course you're going to see a little bit of a bump up in the stock market. But I'd like to remind everybody, to take a deep breath and stay calm. We still have a long way to go. Don't make any drastic changes in your asset allocation. I hope you haven't done so in the first place. And stay calm during these things.
And stay focused and keep that money going into your 401k. Let's talk about the stress test results being released and more banks needing more capital. Do you think that will have a negative impact on the market today or a positive one?
Well, yesterday the news broke that the fact that they're going to, have these banks, they're going to ask some of these banks to raise some more capital. A lot of these banks are coming out and saying, what are you talking about? We're going to protest this. I find it interesting, and I don't really trust much the information that comes out from these government panels. We all know that the government forced almost all the banks to accept TARP money last year because they didn't want to give the impression that any bank was weak. They might be doing very close to the same thing right now, saying, okay, we'll tell everybody that they've got to raise new capital so no one is like a weak target out there, so the shorters and the short sellers come after it. Slowly but surely these banks are going to work their way out of the situation that they're in. I don't really understand the purpose behind these stress tests. I don't get it. I don't understand. I think that the government's kind of wishing that they didn't do this in the first place right now.
All right, Chris, thank you so much. And, of course, Chris will be joining us live on Thursday. In the meantime, if you have any questions for him, go to the guest tab on our website, dailybuzznow.com. And while you're there, we are also